All right, good morning. Sorry, got a little late start there. Catching up. This market does not want to give up an inch. Amazing. I mean, it breaks down and came back yesterday and broke that support, and just right back up. As we watched it yesterday in the green room after we profited on the short side, but we left the big money on the long side on the table there, not taking advantage of that. But at the time, it didn't look like it would come back in that way. And I can tell you for certainty, I would have never held on to it as far as it went. But anyway, kind of the cues as we looked at it intraday, it's just like a slow burn of shorts getting destroyed. Because it was starting to break down, and you could see how far down it went, but it held the area from this time frame, meaning in multiple time frames, we can be short, as we were yesterday, based on intraday time frames, and we can still be long and we'll have a long bias based on higher time frames. So nothing has gone wrong on this time frame yet, meaning our factory work, as we like to call it, of interpreting price action. We have guidelines to have consistency in what we do, is how we interpret price action the same way every day. If you don't have those guidelines, you're going to be all over the place. And one day you'll look at a pattern and say, oh, that's nothing. Another day you'll think it's a long, or maybe you'll think, maybe it's topping out, what have you. So one of our guidelines is, as long as the candle bodies stay in the upper half of a wide range bar, things are okay. It's a way of looking at this time frame and having a way of interpreting that everything's okay, even though in a moment there is that uncertainty. And that's what comes with trading higher time frames, that it requires ignoring what's happening in a smaller time frame to a degree, but we understand what's happening in that time frame. So yesterday there was a sell-off going on, and so it looked like the daily time frame was going to be damaged, but in the middle of the day, we don't know where this is going to end. And it wound up becoming a bottoming tail bar. So at the end of the day, it was like, whoa, that was kind of a close one. The major support is down here at the pivot low, but the deterioration of a trend begins at a higher point in time. So it had this close with a big red bar and close deeply into the wide range bar. Common sense tells us that this is short-term damaged and we need to see if it'll recover. So now, that bottoming tail bar, bodies at the top here, at the end of the day was like, okay, things are still okay. And now this morning, beginning of the day, it's heading up. And so what we have right now for the moment is momentum is beginning to stall. And of course that could pick up again. But what we have, and it's pretty common, what the hell happened there? Big, thick line anyway. It stalled. And we look at the price action, there was a breakdown, I guess, as it retested the topping tail here, went down and came back up again. So as it came higher, it immediately started pulling back, which is a little bit of a concern. Let me see here. Why is that line so fat? Let's try this one. Okay, that should work. There we go. I like that better. So when you have this kind of price action, right, this is what we call a momentum move. And then it went sideways, which was bullish. And it assumes a higher price action, or it's going to go higher. So it broke out and came back in, and okay, buyers are right there on the dip. So as we look at price action from a master trader point of view, we look at it from, well, what does that mean based on what our buyers and sellers are doing? Well, we know once this kind of price action occurs, there are probably some stops under here, and this kind of a dip is going to have sellers hitting the bid. The effect is to remove overhead supply, potential sellers that are looking to sell at higher prices, especially the ones that bought here. So those stops getting taken out, the effect is supposed to be this should be able to move up with relative ease. And it did at the beginning, and then they sold into it again. And now it's pulling back. So while the trend is still up, it still made a higher high, right? That's a fact. The major support down here, if I can draw, which is terribly done with a mouse, major support is down here at the low prior to the higher high. So momentum is slowing. So what we need to see from the bullish point of view is prices stay above this area and pull back. And, ideally it goes higher if that's what's in the cards today. But break down below here, well, the hourly trend has now been violated and we've got a price void. And we've also got some bit of a time correction here, which could send prices, going all the way back down. We don't know what's going to happen, but we have to have a plan. Well, if this, then my thought process has to become that, right? If this, my thought process becomes higher. If that, my thought process becomes lower, right? Being asked, why don't you have a moving average on the 60-minute chart? Because I don't want to. I don't need it. It's a choice. You could certainly put a 20 MA on there. I certainly don't need all of these, right? So these relate to different time frames, right? This is the weekly time frame, the 50, and the 200 should be lurking down here somewhere. And then on my 5-minute, the 60 is the same as the, tells me what's happening on the 15 and such. I've explained that before. Come to the event, I'll be talking about some of this today that I'm doing it after 4 o'clock. And we'll review that, okay? Anyway, let's keep going here. See what other markets are doing. And Qs, well, they're just hanging here. We got a red bar ignored and a retest. It's right up against the old high here. So there's going to be sellers up in this area. So this price action makes sense. We'll see what it does. Right, so far you can see it's just chopping sideways. YM up 300 points here. That sounds impressive until you look at the chart. Say, well, big deal. This isn't anything I want to participate in yet because, it's not even 9:15. I don't know what this is going to look like, but if it looks like this at the end of the day, that's a buy setup. Why? Because while the momentum is slowing, I explained that yesterday. Right? You can see the distance between the highs here. So far, this consolidation has got a correction bar in it. That's what happened yesterday. We got a correction bar. Now we need to see a green day. Now this could continue higher. I don't know, but if it looks like this at the end of the day, this is a buy setup above that high because of the correction bar. Okay. Internals, Japoco, I'm sorry if I'm destroying your name there. I'm talking to someone on YouTube. Internals last week told us, be careful. And actually the week before last week they said, be scared. Or not only be scared, but just know what's happening here. Right? What I said yesterday and what I said in our newsletter was, we know what's going to happen. We just don't know when. Meaning the market is going to correct. And so you can see the internals here. The breadth internal broke down yesterday. Well, because of the price action, of course. Right? So there was damage done to certain stocks, but then the markets came back. Now, what you do on your own, right, and maybe Dan will look at some of this, but what we would do is to say, well, clearly things were damaged yesterday. We saw them going down. So the concept of relative strength and weakness would say, well, which stocks came all the way back up too? And which stocks didn't? So the ones that didn't come back up and form bottoming tail bars are the ones showing relative weakness. And maybe the ones that are going to be good short setups, ideally where we get the market, that rolls over in some meaningful way. So some damage has been done here. But so far, just a bullish consolidation. Sentiment is telling us, you know what? These guys, we call them the wrong way option traders, and they're not always wrong day to day. It's just to say when the majority of them are in agreement and they're all buying an excessive amount of call options, we know historically something is going to happen, meaning it's going to break the trend or it's going to go sideways for a while and it's going to be difficult on the long side. Right? And when the two of these agree, right, that's how we do it here. The two of them have to agree. If one is at an extreme and the other one isn't, well, then it doesn't mean much of anything. We take note of it, but when they're in agreement like they are here, that is when we say that we got a sell signal based on internals. We also say we don't trade the internals, we trade price. So in retrospect, we may come back and say, oh, that little poke day right there in the middle, that was the high day of the move. And the internals called it out. I'm not ready to aggressively short something that's in an uptrend and near all-time highs. I need to see something more convincing. Do you have a course where you explain how to read those graphs on the left? Well, I just explained. The swing trading course, Rubyless, I explain in detail. What I'm explaining here, the use of end of day market internals for swing trading. Yeah, please change the Dan is the drop down police because he catches that every time. He even catches me. Anyway, all right, let's continue here. Russell, right, that's up, but inside day. Consolidating here at the top of the range, a little bit more convincing of the selling that occurred there, broke the lows. And so now, if this can break those highs, I can get above the high of that red bar. Who knows? This thing could be shooting higher. The weekly still looks good. It's a little extended here, but, so far this is sloppy stuff. Bonds are down a little bit, sure. Up, coming back in. Still the weekly chart is building that support down here. And crude oil looks great. Right? Little consolidation pattern developing, maybe what some would call a flag. You can see just sideways intraday, just a mess. Interesting. Gold bouncing back up. Whoa. That was a heck of a comeback. It's got a lot of work to do from the weekly and daily time frames. You can see it pointing down and it's broken down. So we always keep an eye on silver, right? Acting better. So this one may actually, we'll see how it deals with all of this congestion, but silver may outperform if it can really get the whole thing together. And lastly, we look at the transports. They still look fine. Uptrend there, pulling back into the gap fill. And so there you have it. Markets had a bout of selling yesterday. Buyers stepped up again, and here they are this morning. And we'll see what kind of follow through or the lack thereof happens. Silver, a possible core. It's worth the shot here, McGraw. As a starter position, I certainly would not go all in, because of the breakdown. But as a starter position down here near this major support and this pivot low, and even if it breaks down below here, say if you put a stop below $20 or so, and no harm really done. All about money management. Similar, right? You know, it's going to be similar, just the leveraged one. So sure. All right, Dan, all yours.
All right, good morning. Yeah, there's no way I would have guessed last night that the spiders would be gapping like this to all-time highs. But so the bull, everyone on the street is bullish. They're getting paid so far. And I said we will trade in that direction also until we see signs of danger. And we did see signs of danger yesterday. So I did tighten stops. We closed out of a couple put spreads that are expiring Friday at profits. But, you know, the daily and weekly are still bullish here. And it was Becky on CNBC talking about all these records for last month, record this and that. And Joe Kernan, he's just rolling his eyes. He's just like, yeah, as we get another corona surge. I mean, he doesn't believe this either. You know, I haven't personally believed this stealth rally since the March low. The market internals nailed the low, but in terms of where we'd be today on December 1, I would have said less than 0.5%, if you asked me that at those lows. All right, our opens are fine. Some of the EV electric vehicle stocks are gapping up that we have call spreads on. So like this one, we have a call 75. We have a couple of them, but they're all fine. Jemiah, we're short, you know, $40 calls or maybe 45. No, the 50s actually, $50 calls. Stock's at $33, and that's, I saw on the news that they had some of them reported better production volume. Yeah, PayPal we talked about for a while yesterday into the close. Gertz mentioned that, and I said I loved this bottoming tail range expansion bar. It's gapping up. It's going to make the entry harder, but I love that tail. Costco was another one I liked. You know, closing with a bottoming tail at all-time highs with a bullish weekly. I mean, so that's gapping up $4. So, you know, when you get a big gap up in the market, it makes things more difficult. And they're, you know, rolling a little bit here pre-market. So I'm gonna be chilling at the open. EX8S 123. So you got to mark it off. It's gapping right to this resistance. If it were gapping over this week and a half consolidation, I would say I would love it. But you're gapping in a bunch of football players. Futu, that came in a very sloppy overlapping bar manner, so I'm not crazy about that. CRSR. I mean, they're extended, and you know, Greg teaches the first pullback, the first buy setup rather, after a climactic sell setups has lower odds. So definitely day trade if you get a good setup. It is tradable, but you just got to keep in mind that when we have buy setups, which are pullbacks and reversals and uptrends, we are expecting it to take out the prior high, right? So that's the lesson I'm giving you, that a buy setup after a climactic run, don't expect a new high. Maroon Go-Go, 1150. Yeah, that's a good gap play. Yeah, I'll put that here. Maybe 10-minute high. Let's see what it does at the market open. Look at this zoom here, bottom right. I would. I mean, I was hoping, you know, the more it sells off, the more it's eating into our short target. But I think this high is in for a while myself. Genesis for Arun. Yeah, it was a wide range breakout. I have a couple here on my list that I had from yesterday that we can look at. Cross had a nice close. Workday, daily. Hey, Dean, your drop down. I hope Zoom goes out of business for not fixing that drop down thing. It's so annoying. I don't know what their market cap is, and they don't have a developer to spend 1 hour to make your default. That's so irritating. There's no pattern here. There's no pattern. Yeah, YouTube, a couple questions. Today's good morning, APPS, Twitter. Yeah, that's actually one we had on our list yesterday. So definitely, yeah, that looks like a nice continuation. Twitter looks higher. I had a similar to what I mentioned with the the other two with the bottoming tails, PayPal and Costco. Bottoming tail, so at the low of the day, this was a nasty red bar that if it closed at the low, that would be a breakout failure, negating that green bar. That was a wide range breakout. So the bottoming tail, see, in one day, changed the story from bearish to bullish. So yeah, it looks higher. Yeah. Schwab, let's see. Schwab gap into resistance, man, it's too extended. Look at this, you got resistance on the monthly. Weekly is climactic. It made a new high, not by much. So that's what Greg would show you if you had an oscillator. That's a bearish divergence in your oscillator. But no, I mean, I'd rather trade things that are closer to support like this. APPS is superior to Schwab. Here, let me show you a couple others that I just wrote down from yesterday that I like better. So Texan, look, Texan, I got a bottoming tail and it's a closing breakout with a price void. The only problem is my 15-minute chart is extended, but this one is superior. Texan, APPS, Marvel bottoming tail breaking out. Look at the bullish weekly. So it's gapping up though, so it's messing up my entry, but I liked Marvel yesterday. IPOC, it's not ready, but a little bottoming pattern here. Blue, I think someone on YouTube gave this to us yesterday, and I said I liked it. I said, yeah, buy it yesterday, stop last week's low. Look at the weekly. It's a 1, 2, 3 on the weekly. Chef, bullish consolidation here after a wide range breakout. Deer, that's just bullish consolidation at all-time highs. TRMB, same. FIVN, closing breakout. FIS, it's consolidating at resistance. Sono broke out yesterday, pulled in, but held the 50%. Campbell Soup, that's a continuation. That's a breakout. So do you see how all those are jumping out as a better new entry if we decide to want to get more longs here? Let's see, Fungu for William. Fungu 223.50, but I can tell right here on my 15-minute chart, it's gapping right to resistance. So it's gapping to the top. It's in a trading range, and it's gapping to the top end of the channel. You can see that clearly on the daily and weekly. So there's nothing to do with it right now. CVET, it's a big mess. I mean, look at this. You got overlapping bars, you got topping tails, which are false breakouts. Compare CVET to that entire list I just went through that was on my watch list. ENTG from Nathan. Yeah, there's a closing breakout, so that's better. Absolutely. You see the difference? They just jump out at you as being cleaner. It's not extended. It's bullish. It's a closing breakout. It's not. There's no resistance. It's all-time highs. So yeah, that looks great. LSCC. It's another one it's bullish consolidation, and I like the bottoming tail yesterday. So put that on the list. Munster, we can find better. You know, it's you got that prior thing over there. There's the other ones that I said I like better. Starbucks, it's worthy of watching, but it's one that I'm not interested in with the market internals like this. James, show the bottoming pattern. Do you mean IPOC? James, this one? This is a bottoming pattern. IPOC, IPOC. Adobe, it's messy. You know, it had a gap breakout the other day. We had a put spread on that.